Good day and welcome to GMM Pfaudler Limited Q1FY22 Earnings Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Priyanka Daga from GMM Pfaudler Limited. Thank you, and over to you, ma'am.
Thank you, Faizan. Good morning, afternoon, and evening, ladies and gentlemen. A very warm welcome to all of you into the Q1FY22 earnings call of GMM Pfaudler Limited. On this call, we will be referring to the earnings presentation that has been uploaded on the stock exchange and also available on our website. Hope all of you had a chance to go through the same. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Please note the disclaimer mentioning these risks is on slide number 2 of the presentation that was shared earlier during the day. From the management, we have with us our Managing Director, Mr. Tarak Patel, our CFO, Mr. Manish Poddar, and our CFO of International Business, Mr. Alexander Faulkner. Referring to the agenda given on slide number 3, we will start the presentation with an overview of the quarter from Mr. Patel. Over to you, Tarak.
Thank you, Priyanka, and good evening to all the participants. Let me just quickly take you through the presentation and give you an overview of both the India as well as the international business. So the India business has shown tremendous resilience. We've had a strong improvement in both revenue and profitability. Our order intake across all verticals remains very strong, especially driven by heavy engineering, where we've had significant inroads made into the oil and gas and petrochemical segments as well. We've also been very pleased with the Pfaudler International business. The turnaround is happening much before expectations, and this has been driven by the turnaround in both Germany and China. Mavag business continues to outperform. The current backlog at Mavag is close to about 38 million Swiss francs, so significantly higher than what it used to be and significant amount of order intake. In terms of the integration process, we are now completely handed over the whole integration process to our internal teams. We are now working with the local geographies and local offices to extend the operational excellence, the cross-selling, and the low-cost sourcing models so as to increase market share and profitability. I'm happy to report as well that you will see now some of the impact of the synergies coming into our bottom line as well. We are very happy also with the order intake, which shows and gives us good visibility for this financial year. Our outlook for this year remains very positive, not only in India but also globally. Most of the Pfaudler facilities are now booked, and now we are looking at adding capex in certain areas so that to free up some capacity. We believe that the chemical and pharmaceutical market in these geographies in Europe and in the US especially will continue to invest, and we see a lot of growth coming from there. In terms of GMM Pfaudler standalone performance, even though we had some disruption due to COVID, our performance has still been very good. We are currently now running both Karamsad and Hyderabad at full capacity. The Vatva facility is kind of operational. We have 2 bays operational, and we expect 2 more bays to come online shortly. We've ordered 2 new furnaces, one for Hyderabad and one for Gujarat, and we now believe that that will also help us free up some capacity and kind of have more capacity. Like I mentioned to you, we got a significantly large order from L&T, close to more than 100 crores worth of heavy engineering the business from L&T for the oil and gas and the petrochemical segment. So that puts us in a very good position for heavy engineering. And the great thing about this order, it comes perfectly in time so that the Vatva facility which we have acquired, the new order will be manufactured there. We've also been rated by ICRA, a subsidiary of Moody's, as AA-, stable, A1+. Just to give you a quick update on the numbers, in India, the revenue grew by 31%, 130 crores to 171 crores this quarter. EBITDA is up 80% to 24.3 crores to 43.7 crores. The order intake has improved significantly, up by about 120%. So the order intake during this quarter was close to 290 crores. The current backlog compared to previous year same time has increased by 60%. So we have about 500 crores of backlog currently on our books here in India. Like I mentioned to you, gives us great visibility for the future. A quick update on the international business. Pfaudler International has shown improvement both in revenue, profitability, and order intake. Germany and Intersteel are stronger and improved profitability and robust order book. Germany, obviously, the facility there has gone from loss-making to positive, close to $1 million of EBITDA. So that is a significant improvement there. Mavag's business, like I mentioned, has significantly outperformed. We recently received an order for 8 million Swiss francs, the largest single order in Mavag's history, taking their backlog to about 38.5 million Swiss francs. Please bear in mind that this company's revenue last year was about 15 million Swiss francs, so it has maybe double of its revenues already in their backlog. Normag, Italy, UK, Benelux also on track. We're seeing a strong recovery in the US, and we are now in the process of adding some capacity in Brazil so that we can cater to the growing US market. China also has turned around and has made a good start this quarter and has turned profitable. Again, site improvement and execution is the focus there. And then we also now have a commercial strategy in place so that we want to increase market share. So international results, if we compare, obviously we can't compare, Q1 with Q1 of this financial year, but looking at pro forma numbers, there's a 23% improvement in revenue, 29% improvement in EBITDA, order intake is up by 37%, and order backlog is up by 31%. In terms of consolidated results, again, not including the PPA impact, which I'll speak about in a little while, the revenue is up 257%, EBITDA up 80%, order intake is up 378%, and then order backlog up 340%. Again, not right to compare Q1 and Q1 because last year we didn't have Pfaudler as part of our business, and this year we do, but still it goes to show that there's improvement in all our fronts. In terms of the income statement, our numbers, so like I mentioned to you, India standalone is 171 crores with about 43.7 crores of EBITDA, which comes to about 26% as a percentage of revenue. Pfaudler standalone is about 408 crores of revenue with about 40.6 crores of EBITDA, which is about a 10% EBITDA margin. So significantly higher than what we had guided towards. And obviously, the final impact of PPA, which is a minus 46.5 crores. So if you look at it, there's 43.7 crores of EBITDA coming from GMM standalone, plus 40.6 coming from Pfaudler, which gives you about 84 crores, minus 46.5, which is the PPA impact. Again, it's a non-cash impact. It's an accounting entry, and this is the last quarter that this PPA impact will reflect in our books. So next quarter, we will not have any further PPA impact, so you can straight away add this number back. There are some intercompany eliminations, and hence we get a total of 551 crores of revenue and about the EBITDA of about 35.9 crores, which is about 7%. And then obviously PBT and PAT are negative, and that's mainly because of the impact of PPA. Again, non-cash does not affect the cash flows, and from next quarter, again, it won't be there. Just a quick update on integration efforts as well. We've made a good amount of inroads, both in terms of operational excellence, value sourcing and cross-selling. We are in the process of launching some products here in India. Similarly, we've used the Pfaudler network to sell Indian-made products into European, US, and Southeast Asian markets. We are also looking at implementing some of the manufacturing excellence projects that we have had here in India to some of these global subsidiaries as well. So all in all, we are quite happy with the performance, especially of the international business, which has turned around quicker than expected. And with the backlog that we have in hand, we expect this year to build on the momentum and really come out with a good performance this year. India obviously remains very strong, and we will build on the India performance. And now with the new capacity coming in, the new Vatva plant also coming online, we expect the India growth story to continue. So with that, I don't have any more points that I would like to make, and we will then open it to Q&A and answer any of the questions that you may have. So thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Amandeep Singh from Ambit Capital. Please go ahead.
Thanks for the opportunity. Tarak, firstly on the domestic business, we saw a sequential decline of 10%, and you mentioned that it would be largely led by the COVID impact. But can you help us understand how would be the segment-wise revenue stack up during the quarter between glass-lined, HE and PP for the standalone business, and how does this compare with the last quarter?
Sure. So I would just kind of caution you, in a manufacturing company, Q4 is always a very big quarter for all manufacturing companies, so it would be kind of unfair to compare Q4 with Q1. But in any case, yes, there is a slight decline because of COVID, but anyway, our Q1s are always a little bit lower. In terms of the breakup, I think Manish, you can provide that.
So I think we're now doing more technology systems and services from a breakup standpoint. And because that is getting in line with the international business that we wanted to cater to. Systems and breakup. So if you just give us some time, we'll just combine that breakup.
If you look at slide number 14 of the presentation, that has the segmental overview, which talks about technology systems and services. So on a standalone basis, 91% of our revenue came from technologies business.
So technologies, again, just to clear your mind, is basically any equipment that we manufacture. So all our F&D, glass line, everything will go into technology. After sales is obviously the services part of the business, the spare parts, and then the systems is anytime we combine these into a large kind of a complete unit.
Sure, Tarak, I got that point. But this breakup would be helpful if possible. Secondly, if you mentioned about order backlog of CHF 38.5 million at Mavag. So can you help us understand the delivery timeline for this, and how would this impact the domestic PP segment given the outsourcing?
Right. So I think most of our PP segments here are now geared up for the capacity that we now send to Mavag. And obviously Mavag has been successful because they have a low-cost source here in India, which makes them much more competitive in the European and US market. But obviously this number of 38.5 is significantly higher than anything that they could do in Switzerland. So we have two thought processes here. One is we're going to kind of free up some capacity in Karamsad by moving some of the PP work to Vatva, because Vatva we have 7 sheds, right? And we're not going to use all 7 in the short term. So some production will move there. We will then have more space available for Mavag related work here in India. And what we're planning to also do, Amandeep, is we are going to use the US now. US, the Rochester Pfaudler facility is also kind of large, and we will use that to finish some of this filtration drying work for Mavag, and we will use that to kind of free up some capacity as well. So it's a 3-pronged approach, and obviously we want to kind of increase revenue. If we have such a strong backlog, it's important that we kind of work as much as possible to make sure that we can kind of bring it down as soon as possible.
Sure, Tarak, that was really helpful. And one more, if I could squeeze in. So in the previous phone call, you mentioned about coming back with the updated guidance, given the few acquisitions, including SDO Tech in place. So any update on that?
So I think we're still some time away from that, from firming up the strategy and long-term strategy and plan around that. So give us probably a couple of more quarters, and then we'll be able to.
But your question was more again, around Vatva, right?
Yeah, I mean, so on the FY24, the consolidated guidance, which I guess you had mentioned, and given the better than expected turnaround happening, and also including the Vatva facility, any updated numbers on that, or we can wait a couple of quarters for that?
Yeah, so Vatva, to be honest with you, we started up much quicker than expected. I was actually planning it in maybe Q2 or early Q3. But because of these large orders that have come in, we need to ramp up and have the capacity available immediately, and that's why we've done that. But I think from a guidance standpoint, let these 2 quarters see. This is the first quarter that we're consolidating fully. From next quarter, the PPA impact also goes away, so you'll get a true idea in terms of what the numbers are. I think then maybe 6 months, maybe 6 months in this calendar year, we'll try and look at maybe if there is any requirement and how we are tracking towards the final the performance. We'll try and give you some kind of update on the guidance.
So, Tarak, that's really helpful. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Hello. Yeah. Sure, I have a question with regards to the opportunity size which you have mentioned in the annual report. The domestic opportunity size coming to around 74,000 crore over FY20 to 23. And we did around 640 crore of revenue last year in the standalone. So how should we understand that? How will this convert for us in terms of our top line over next 2 to 3 year period?
So I would, the calculation that we normally will use is we continue to grow at a similar rate that we have been. Luckily for us, the glass-lined industry itself has been growing at a good pace. With the investments coming in agrochemicals, specialty chemicals, and pharmaceutical, we believe that this market will expand. So we have a bigger market to kind of participate in. And currently we have a market share close to 50%, if not more. So that's the thumb rule that you can take. Having said that, we've also kind of entered into new markets such as oil and gas, petrochemicals, which are growing at much faster rates and also much, much bigger, right? So even a small kind of pie there, even taking maybe a few big orders means 200, 300 crores of additional the order intake. So I think you can, as a rule of thumb, India will continue to grow at a similar rate for the next 3 years that we have been enjoying for the last maybe few years. I think that's what you can hope for. And I think the markets are there. The investment will continue. From what we are seeing, the pipelines and the kind of inquiries that we have on hand, we don't believe that either of these segments will slow down in the foreseeable future.
Got it. So this would include the PLI-led opportunity or is it excluding this?
No, so we've not really, factored that in. If that comes in, obviously that's a bonus. Whatever government policies or changes that will happen that will promote further manufacturing here in India or more investment coming in, that would be just bonus on top of what we are currently calculating. And obviously being bullish, that's why we've kind of acquired a new factory, so to free up capacity in Karamsad and then adding 2 new furnaces. So I don't see any reason why there should be any kind of slowdown in terms of growth when it comes to GMM Pfaudler standalone.
Got it. And sir, if I can ask one more question. Now, this is with regards to the expansion and the opportunity which we see in the Western markets. You mentioned the Europe and the US. Now, there the product configuration would be premium to what we are selling in India with regards like the similar portfolio which we would be selling here. Would that have some sort of premium edge to it?
See, in terms of the basic equipment, it's very similar. The glass that we use here in India is the same as the glass they use there. Obviously, there could be more bells and whistles. Their equipment might be more sophisticated compared to what an Indian buyer would buy, but that's the only difference. But there's nothing that we cannot manufacture here that they are manufacturing. So that's the only difference. They do have some kind of smaller technologies in different glasses that we don't make here in India, but we can import it and kind of coat it over here. But otherwise, there's no real change in terms of. So that's why the idea of using India as a low-cost source, and maybe this is a good time to talk about some of the successes that we've had. We had a certain order in Spain. We had a certain order in Russia where the customer would not have bought from Pfaudler because of the price points, but now having access to India, Pfaudler was able to sell Indian-made equipment in these geographies and get market share and at good pricing as well. And similarly, we are currently working on a very large project in the US as well, where we believe that the Indian-made equipment will be a right solution for the customer there.
Thank you. Mr. Shah, may we request that you return to the question queue for follow-up questions? Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants at the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Sandeep Tulsian from GM Financial. Please go ahead.
Yeah, very good evening, Tarak and everyone.
Hi.
So the first question is pertaining to the margin, stable margin levels in Pfaudler International as per your earlier guidance of that FY24 16% consol gave a back calculation of roughly around 12 to 13% margins. However, you delivered 9.5% in the current quarter, which has come in earlier than what you were expecting. So would you think that these 12-13% margins can be further exceeded over a 3-year period, or would you still want to maintain similar guidance for international business margins?
Yes, Sandeep, I think this is the first full quarter for Pfaudler International, and probably a bit too early to say that this 9.5-10% EBITDA margins are more sustainable. I think we need to test this number for another 2-3 quarters and then probably. So, but I think Sandeep, just to jump in here and kind of add, if orders were a problem, we would have been a little bit more conservative, but the good thing is that order is already in, right? So we are not scrambling for orders. Now the focus really shifts to execution, and if we can get the momentum going in the execution, there's no reason why these numbers are not only sustainable, but maybe even probably improvable. Maybe Alex can jump in and kind of give you a little bit of color on the international business and what he expects the margin profiles to be.
Yeah, happy to do so. Thanks, Tarak, and hello everyone. In fact, we are really happy with the performance of the international business. And in fact, you're right, we are doing better than we gave guidance for before. From the margin perspective, this is especially driven by the faster turnaround of the German business and also other improvement measures, and we already see the results earlier. So the margin definitely went up. And also in the future, we still under the COVID crisis in several jurisdictions. Nevertheless, if this now comes more or less to the end, we also see there another push to the margins, another improvement potentials. So we are really happy with the performance here to date and also positive for the outlook.
Got it. And second question is on pertaining to, you mentioned in last conference call that there is a particular European country where you want to make a mark, where low-cost products are more acceptable and Pfaudler does not have a share there. If you can update on that, and also if you can parallelly give us the capex guidance for this year. Those are my last questions.
Right. So on the markets where Pfaudler is not very strong, Spanish market, some European, Eastern European, Russian market, Southeast Asia are areas that definitely India can be leveraged, and we are leveraging India already. China, obviously, there is a good potential there to improve the Chinese business as well. We have now a factory which has double the capacity, so we believe that China is definitely a growth area for us. So these are the kind of low-hanging fruit that we have. In terms of capex, there is a new furnace that we'll be adding in Brazil. That's about $400,000. There is a good backlog now in the US, and Brazil needs to ramp up because Brazil is a low-cost source for the US market, and the US markets are investing. In India, like I mentioned to you, we've already approved 2 capexes for 2 new furnaces, one in Karamsad and one in Hyderabad. This was done last board meeting. And besides that, we have no other significant capex plan. So I think this will put us in a strong position, and then obviously moving the HE business out from Karamsad gives us that additional capacity in glass line in Karamsad.
Thank you.
Thank you.
Mr. Tulsian, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Utsav Mehta from Edelweiss AMC. Please go ahead.
Hi, good evening, Tarak, and thanks for taking my question. Could you just give some sense on the operating cash flows that you've done in this quarter and where the working capital at a consolidated basis would be?
Yeah, so cash flows has been consistent and very healthy. Although there is some increased investment in regard to inventory due to the higher backlog that we have, order backlog, and also we need to safeguard ourselves on a back-to-back basis for the procurement of the steel prices. And like Tarak mentioned earlier, the non-cash expense of 46.5 crores of PPA impact also gets into the cash flow for us. So we are pretty much comfortable soon. Of course, in next quarter, we'll formally be sharing the cash flow going forward. From a debt-to-EBITDA perspective, so we have a debt-equity ratio of 1, and the net debt to EBITDA on a consolidated basis as well is at 1. So we are on and all at June end. We're very comfortable from a cash flow perspective.
Okay. Could I just request the gross debt number? And second part of my question, Tarak, this is the second quarter in a running that the standalone business has done close to 25 or 25% plus margins. Do you believe that this sort of a number is sustainable, or is there some element of benefits of raw material prices or inventory gains baked into this, and therefore it should revert to 20-21% back again?
I don't think so. I think that we can sustain these margins on 2 or 3 fronts. One is that we will add a significant amount of export business now that we are part of the Pfaudler network and we are leveraging India. So we will be doing probably close to maybe 17, 18, 20% of export business every year. That will definitely help the margin profile. Like I mentioned to you, we've also kind of going to ramp up our intercompany business. So the stuff that we're going to send to Mavag because of their backlog will kind of increase as well. And then with the Vatva facility and the large flow through of orders going through that, I'm sure there'll be some absorption as well. So I'm not too fussed about profitability numbers for this year. And in the glass-lined space, it's pretty easy to pass on these price increases to our customers because they buy raw materials all the time. Glass-lined is not the only equipment they buy. They buy stainless steel, they buy heat exchangers. So they take those metal prices into account when they kind of budget their expenditure. So all in all, I believe that we can sustain these margins for this financial year. Yeah. And on the debt perspective, your question, Uttam, the gross debt is at $73 million. Cash in hand is $30 million. So net debt turns out to be at $43 million on a global basis.
Wonderful, gentlemen. Thank you so much for your time.
Thank you.
Thank you. The next question is from the line of Jayveer Parekh from Sunidhi Securities and Finance. Please go ahead.
Hi, Tarak. Great commentary. I just had a clarification question on the PPA. From next quarter, the entire 65 crores will go away, or just the changes in inventory, the 46.5 crores?
Right. So, hi, good evening, Jay. This is Manish here. So 46 goes off on the COGS side for the next quarter onwards. So it was 92, 46 in the previous quarter, 46 in the next quarter. In this quarter, that is Q1. So that is off. The amortization of intangibles, which is at 18.8 crore rupees this quarter, will be 17.8 in the next quarter, and thereafter it will be 6 crores per quarter for Q3 and Q4, and thereafter it will be at 5.5 crores per quarter.
Thanks, that's very helpful. Thanks, Manish. Thanks. That's it.
Thank you. The next question is from the line of Shanti Patel from Shanti Patel Investments. Please go ahead.
Sir, my question is, taking into consideration all these factors, what will be the return on capital employed and return on equity as on 31st March 2022?
So return on capital. So currently, kindly appreciate that future guidance we will not be able to share with you, but currently we are running at a ROCE of 16%.
No, but we have got more or less monopoly type of products, correct? The competition is not that much. Then return on capital and return on equity should be much, much higher than what it is.
So this is from a margin standpoint, I think we have been running at 25+% on the domestic market, and now international business is there, which does lower our percentage per se, but then it gives us more dollars in the absolute terms. So we need to appreciate from that perspective that from a percentage perspective, it may go down on a global basis, but in absolute terms, it's going to nearly double in coming quarters.
Sir, I will repeat. You told return on equity is 15% or return on capital?
Return on capital employed is 16%.
And return on equity?
Return on equity, I'll have to check. I'll come back to you on that.
But in terms of the coming back to our numbers, pre-acquisition numbers, we have targeted internally a 3-year period by where the ROE and ROC will come back to those numbers. Obviously, there will be a little bit drop in these numbers because of the acquisitions, but a little bit of downturn. But in the end of the day, we are changing the size and scale of the company. So eventually, once things settle down, we should be able to come back to the original numbers.
Thank you. Mr. Patel, may we request that you return to the question queue for follow-up questions? Thank you. The next question is from the line of Srinivas from Rockford Consultancy. Please go ahead.
Good evening, sir. In the PPT presentation, page number 13, profit before tax is 18.1 crore. The tax is
sorry, can you please repeat?
181 million, and the tax is 118 million.
Right.
So is it such a high tax there?
This is basically the additional tax provision that we had to make in this quarter in probably US and regarding the amortization. Do you want to explain that?
No. The profit before tax, the tax amount on 181 million profit, tax cannot be such a high, no?
No, I agree that this is the deferred tax amount on 181 PBT. You are seeing a tax impact of 118, which is considerably higher vis-a-vis a percentage of average 25%. But that is where I'm saying we had an additional tax, impact on account of deferred taxation due to the timing differences, and that's why I just wanted. Alex, you would like to explain this further on probably it's on the US piece, and maybe on the amortization of the intangible differences, timing differences.
So next quarter, such heavy tax provision will not be required.
On a consistent basis, sir, the tax impact would be approximately 25%.
Okay. But in this quarter, it is more.
This quarter, it is more on a individual in a country basis in US. There was some additional tax, a calculation difference due to the timing difference of the intangible amortization.
Okay. My second question is, Tarak just mentioned that we have ordered 2 new furnaces, one for Karamsad, one for Hyderabad. When do you envisage the commissioning of these new furnaces?
So Hyderabad furnace we should commission by Q4. So we should see some improvement in Q4 output in Hyderabad, and most likely Karamsad will be for Q1 of next year.
Okay. Thank you, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Amar Maurya from AlfAccurate Advisors. Please go ahead.
Thanks for the opportunity.
Yes.
So, couple of bookkeeping questions. I don't know whether you would be able to share that. So, what would be the India glass-lined revenue this quarter?
So, like we mentioned earlier, that we need to change the segment that we have been reviewing, because Pfaudler has been reviewing monitoring technology systems and services, while the Indian entity has been reviewing basis the glass lining, heavy engineering, and the PP divisions. So we have decided that going forward we should be reviewing basis technology systems and services. Services being the aftermarket business gives us a separate monitoring, so gives us the focus as well, which is the high margin area, which you would see in slide number 14. The international business has got a substantial share, but the standalone business does not have that share, so that's the piece that we want to enhance. So 91% of technology, services, systems of 3% and services of 5% on a standalone basis is the segmental breakdown. And going forward, we intend to monitor the same segment.
Okay.
And so for ease of use, maybe to help you transition to this new segmental breakdown, we have given the FY21 business segment reclassification of page number 18, or slide number 18, where we have given our FY21 revenue breakdown, the traditional breakdown which you were used to. How does that transition into technology, services and segments? So this will help you kind of transition your estimates going forward.
Okay, but going forward now, this is the new standard which will be following it, right?
Absolutely. Yes.
And sir, what would be the order book for Mavag?
Order book, like Tarak mentioned, currently at this point of time in August and in mid-August, we are at 38.5 million CHF.
Order backlog.
Yeah. 38.5 billion, right?
Million. 38.5 million Swiss francs.
Swiss franc, okay.
So that is by 70, whatever if you do 70, 80, about 240 crores.
Okay. And sir, like, about the capacity expansion, I believe our Hyderabad facility, that 400 to 500 GL capacity would be operational by Q4, right?
Sorry, can you please repeat?
I'm saying the Hyderabad capacity expansion, when it will be commissioned? It will be commissioned in Q4, right? As per the plan?
It will be in Q4, but you will already see, so this year we started Hyderabad, we had a full year and we started, so the Hyderabad performance has been also excellent. And with this new, and that's what we were really waiting for, to really see if they can ramp up to a specific momentum and then we can add more capacity. So they have done that quite well. We've already broken all the records that the last company had kind of done there in terms of monthly output, number of units, revenue. And by the time this new facility, a new furnace comes in by the end of this calendar year, we would then have ramped up of our fabrication capacity so that we can then have the additional output as well.
Thank you. Mr. Moria, may we request that you return to the question queue for follow-up questions. The next question is from the line of Ronak Vora from OHM Advisor. Please go ahead. Mr.
Hello, Ronak?
Mr.
Hello.
Yes.
Sir, two questions. Firstly, the employee cost in the Indian operations are increased on a YOY basis from 15 to almost 20 crores. Is it because of the Vadodara facility?
So there are two reasons for that. Yes, one is on the account of Vadodara facility, we have to hire, upscale on the employee strength, A. And B, as you would expect, we have the annual appraisal cycle going up. So March versus April, so that's the second reason.
Okay. Secondly, on a sustainable basis, what kind of tax rates can we see in the Pfaudler business? So current year you said that because of US it was a bit higher because of intangible assets amortization. So
25.7. We take it at 26%.
26% for the Pfaudler business, correct?
For this international, Pfaudler international business.
Okay. And Tarak, one question for you. So currently the business is going fantastically for Pfaudler with the whole order ramp up and everything. So how do we see the business, turning out in the next 3 years? Can we say that at least it can grow 50%?
So, I don't like to commit on numbers right now. We're still kind of getting the hang of this business, understanding the business, kind of getting the momentum going. But I would just point to what we have done with Mavag, right? When we bought Mavag, it was a $5-6 million company in terms of revenues. Today it's closer to 20 and can ramp up to 25. So that's grown 3 times, 4 times, right? I think if we have the right strategy in place in terms of using and leveraging low-cost countries, which we are doing already, We're looking to add and grow products that are profitable in our technology base, which we are doing. And if we look at really improving the production on the site, because like I mentioned to you, the orders are there. We're not worried about orders at all. This is really a good situation for this company to be in, because the last thing you want to is to take over a company and then worry and scramble for orders at low prices and low margins. That's not the case for us. We have a year worth of backlog across all geographies. The pricing and the margin profiles all look very good. So really the focus across all factories is really to get the momentum of manufacturing going and really push out as much product as possible. If we can do that, I believe that this year you will see a good amount of improvement. And we've been obviously conservative, and we are seeing things turn around much quicker than expected. But I believe that there's a lot more that we can expect from this company. There are a lot more synergies, and I'm personally very pleased in the way things are going, and I think things can only look a lot better.
Thank you, Mr. Vora. May we request that you return to the question queue for follow-up questions. The next question is from the line of Vipul Shah from RW Equity. Please go ahead.
Yeah, hi. I just this one for Manish. So, what would be the net debt sitting in Pfaudler?
So net debt on a global basis, we said.
No, I just want Pfaudler.
Is 350 crores. That's not net, no? That's gross. Yeah, that's gross. Yeah, 348 100. So 148. Yeah, 148 crores.
So 148 is the debt sitting in Pfaudler, and can you then can you just share what is the net debt with GMM plus Mavag?
GMM plus Mavag, we are at 160 plus 38, gives you 180, 170 crores.
So that's the net at GMM plus Mavag debt, and 148 is the net debt at Pfaudler. Thanks a lot. Appreciate it.
Thank you. The next question is from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, thank you for taking up the follow-up question. Two questions from my side. One is the order book that you are sharing. Just want to check whether this constitutes only the technology piece, or does this also constitute the services piece also?
It has all orders. Obviously, it will be heavy on equipment because the services piece has much shorter lead times, and there is still scope of booking more. But currently, the order book that we are currently maintaining, and the group Concall order number is 1,700 odd crores, right?
Yeah, 1,700.
Yeah, 1,700 odd crores at the end of Q1FY22. That is the group level order backlog.
All right. And second question was pertaining to this Vatva facility. I mean, the company that was operating this plant prior to you did peak revenues of as high as 800-900 crores. So should that be the number that we should consider as peak output that this facility can deliver once all the 7 days are operational?
No. So I think that number is wrong. The company that operated the last business had a maximum revenue of 200 crores. That was only
from this plant. So, Sandeep, if you're listening, so we would, because this is only a plant being acquired, so they may have other plants as well. So that number may be something different. But like I think Tarak mentioned earlier, that something like 450 or 500 crores of turnover is something what we can expect in the long run from Vatva facility. HTOT did 180 or 185 at their peak. But that was 5 years ago when the metal prices were literally less than half of the current prices.
Understood. All right. Thank you so much.
Thank you. The next question is from the line of Nilesh Meena, individual investor. Please go ahead. The current participant has left the question queue. The next question is from the line of B. Surendra, individual investor. Please go ahead.
Hello, good evening, sir.
Yes, sir. Good evening.
Sir, I want to have more information on this, our Vatva plant, the present status of the Vatva plant.
So we have taken control of the Vatva plant a few months ago. We now have a team of people there. We have contractors in place. We've also moved some of our orders from Karamsad to Vatva. So manufacturing has started in full swing there. And over the next few months, you will see more orders coming in to Vatva, and we will be using the Vatva facility to manufacture more heavy engineering equipment.
One more question, sir. What is our revenue in Mixion business in this quarter?
See, like we mentioned, we have stopped monitoring on basis the earlier segment. So we may be talking about technology systems and services again. And like Priyanka mentioned earlier, to help you transition, there is a slide number 18 in place to get to the new numbers, the new segment.
Okay.
But having said that, I think all our product lines have a strong order backlog. One is not heavier than the other. That's why we've been able to maintain our profitability as well. So across the board, we are booked now in Mixion, in proprietary, in heavy engineering, and in glass-lined, and that's why we've been able to sustain our profitability.
Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
So as I mentioned earlier, yes, the business looks very promising. The India business obviously continues to do very well, double-digit growth, and we have a very positive outlook for this financial year. With the new investments coming in, I think that puts us in a good position for next year as well. So the focus will be obviously on execution, but also kind of building a backlog for the next financial year. Globally also, like I mentioned, very happy and pleased with the turnaround, much quicker than expected. I think that will give a big boost to many of the people who are wondering how the Pfaudler international business would perform. And I think the only way now is obviously up. I think with the kind of synergies that we're going to work on, that we're building in place, I think that we have a bright future ahead of us. And obviously you'll see some of this kind of flowing through in the next few quarters, which will give you a much better idea in terms of how the businesses are performing. So I do appreciate your time and thank you for logging on, and look forward to talking to you again next quarter. Thank you very much. Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of GMM Pfaudler Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.